Mic check.
Welcome to Making Sense of Wealth with Andrew Whalen, your personal CFO. The show where we break down complex financial topics and market events into investor-friendly concepts so that you can make better informed decisions about your financial future. Because if it don't make dollars, it don't make sense.
Hey, welcome to another episode of Making Sense of Wealth. I'm your host, Andrew Whalen, and today we're diving into one of the most talked about moments in recent political history. President Donald Trump is back in the White House for his second term. His first day was nothing short of headline-worthy. Whether you're a political junkie or just curious about what's next for the country, this episode is definitely for you. Let's start with his inaugural address. Trump delivered what many are calling a sober and unifying speech, one that hinted at a new golden age in America. However, true to form, Trump quickly shifted gears when he addressed an overflow room at the Capitol. In a more candid tone, he admitted he had considered saying some controversial things, but was advised against it by his Vice President J.D. Vance and First Lady Melania Trump. That's classic Trump, right? In this unscripted moment, Trump signaled big plans for his second term, including pardoning over 1,500 individuals convicted in connections to the January 6th Capitol riot. This move underscores his commitment to his base and his intent to govern on his own terms, unconstrained by conventional advice of advisors or critics. Let's talk executive orders. Trump hit the ground running with a staggering pace. Within hours of retaking the office, he signed orders that implemented a federal hiring freeze, mandated government workers to return to the office full-time, took steps to end birthright citizenship, and began withdrawing from a major international climate accord. He also called for the dismantling of government-backed diversity, equity, and inclusion initiatives. Now, many of these moves will face legal challenges, but the message is clear. Trump is prioritizing rapid and dramatic change. Now, unlike in 2017, Trump returns to Washington with experience. He and his team know the levers of government and how to navigate the bureaucracy. This time, his administration is better prepared, a stark contrast to the chaotic early days of his first term. His staff, many of whom are returning veterans, hit the ground running, notably Caroline Leavitt, who started as an intern in his first term and is now his top spokeswoman. But it wasn't just the policies that caught everyone's attention. Among the inauguration attendees were tech moguls like Mark Zuckerberg, Jeff Bezos, two big figures Trump has publicly criticized in the past. Their presence signals a potential shift in how corporate America is approaching this administration. Now, as the day progressed, Trump made it clear that he's not pulling any punches. Whether you agree with his policies or not, one thing is undeniable. This second term will be anything but predictable. In the coming weeks, his administration is expected to push for massive federal spending cuts, mass deportation, and even attempts to fire thousands of career government employees. And speaking of bold moves, President Trump made waves in the cryptocurrency world by issuing a full and unconditional pardon to Ross Ulbricht. He is the founder of the infamous Silk Road marketplace. Ulbricht has been serving a life sentence without parole since 2015 for running the darknet bazaar where over $200 million worth of illegal drugs and goods were bought and sold using Bitcoin. His supporters in the crypto community have long argued that his sentence was excessively harsh. During his campaign, Trump pledged to address this issue, and now he has delivered on that promise. Crypto leaders were quick to react. So Jesse Powell, the co-founder of Kraken, posted, quote, "Thank you at the real Donald Trump for keeping your word. You have our admiration, respect, and loyalty." Meanwhile, Jack Mallers, a prominent crypto entrepreneur, celebrated Ulbricht's release, saying, quote, "It would have been an affront to human dignity and morality to let one of Bitcoin's pioneers rot in prison while others benefit from the network he helped popularize." Now, I don't necessarily agree with what happened here, but it's the world that we're living in. The pardon has stirred debate. While many hail it as a victory for justice and the crypto movement, others, like myself, point to the consequences of Ulbricht's actions, including drug overdoses linked to Silk Road transactions. Regardless of where you stand, this decision adds yet another layer of complexity to Trump's already controversial presidency. But that's not the only reason the crypto world is buzzing. So Bitcoin has breached the $100,000 mark for the first time, more than doubling in value this year alone. So as of now, it's trading right around 95,000. Smaller tokens like Ether and Solana are also surging. What's really fueling this rally? Well, President Trump's promise to make the US the crypto capital of the planet has been a major catalyst. One of the campaigns was that he would pledge to draft a crypto-friendly regulations, creating a national Bitcoin reserve and position the US as a leader in digital assets. His administration is filling top positions with crypto allies, such as Paul Atkins heading the SEC, Elon Musk leading the new Department of Government Efficiency, or DOGE. Trump's pro-crypto stance has reignited enthusiasm among investors, with billions pouring into Bitcoin-focused ETFs since Election Day. Even Wall Street is skeptical. Wall Street skeptics are warming up. BlackRock, for example, has launched a Bitcoin ETF, and Charles Schwab is exploring offering spot trading for digital assets. Meanwhile, Goldman Sachs has disclosed over $700 million in crypto ETF holdings. The big question now, can Bitcoin keep climbing? Analysts are divided. Some believe the bullish sentiment could push prices above 200,000 by 2025. However, others caution that the market's reliance on regulatory clarity and Trump's unpredictable policies could spark a lot of volatility. And I would tend to agree with that. Now, switching gears, let's talk about a hot topic, which is the housing market, where Wall Street's take might actually surprise you. Home prices are sky high, but according to real estate analytics firm Green Street, the stock market is pricing single-family homes at a steep discount. Shares of major landlords like Invitation Homes and American Homes for Rent are trading far below their net asset values, down 35% and 20% respectively. To put this in perspective, Green Street estimates that while the average home in metro areas where Invitation Home owns properties sells for $415,000, the company's share price, though, implies investors believe these homes are only worth $310,000. This disconnect between Wall Street valuations and the open market prices could be signaling a correction ahead. Now, historically, when stock prices of real estate portfolios dip far below their private market values, broader home prices eventually follow. Green Street notes that single-family home prices often remain inflated longer than commercial real estate because they're driven by owner occupancies, not just investors. Now, here's an interesting wrinkle. Wall Street landlords have largely stepped back from buying existing homes. Now, in the third quarter of 2024, institutional investors made up just 0.3% of U.S. home purchases, the lowest in 7 years, including the lockdown era. Now, why is this? The math doesn't work. With borrowing costs high, big investors need properties offering a 5 to 6% cap rate, but most homes now are sitting at just about 4%. So what's their play? Instead of buying, landlords like American Homes for Rent are building new properties or snapping up newly constructed homes from developers. This strategy not only diversifies their portfolio, but also helps address the housing supply shortage. Interestingly, there's still opportunity in fixer-uppers. Amherst, who's a real estate investor, estimates that there are $12 billion worth of homes available at 5.75% cap rate. These properties often need renovations, but fixing them can be, far cheaper than building a new one, about $20 to $30 per square foot versus $200 for new construction. The takeaway? The housing market is complex and layered. While owner occupancies may be driving up prices, Wall Street hesitation could hint at a market correction down the road. What does this mean for you? It's worth keeping an eye on housing trends, whether you're a buyer, seller, or even just an investor. That's all for this week's episode of Making Sense of Wealth. Thank you for joining me, and as always, stay informed, stay smart, and stay engaged. Until next time, I'm Andrew Whalen.
All opinions expressed by Andrew Whalen, employees at Whalen Financial, or any other podcast guest are solely their own opinions and do not reflect the opinion of Whalen Financial. Whalen Financial is a registered investment advisor. This podcast is for information purposes only and should not be relied upon for investment decisions. Clients of Whalen Financial may maintain positions in the securities discussed in this podcast.